Hello there, Maverick traders. This is Rob Reinhold. It is the market roundup, August 17th. And boy, the market broke today, and it broke pretty hard. In this session, we are going to look at today's trading day. We're going to break down all the numbers. We're going to take a look at the charts. It was not a pretty day today. We're going to redo our scoring system. Did we get a downgrade to even worse bearishness than we were at? And then, of course, we're always looking to trade setups. I've got 3 setups for you for today's session.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
It was an ugly day. Let's jump into the numbers. And here we are. We see that the Dow lost almost 1%, S&P 0.75%, NASDAQ and the Qs were the worst, down over 1%. And you didn't understand, at one point during the day, we were positive, and we just kept sliding and sliding, closing on our lows for the end of the day. Oil was up, so the energy sector was the only sector that was up. That was the only sector that we are bullish on at the moment, and it actually has been holding up okay. I'm not saying the trades have been doing great in there, but they've been holding up for sure. If we take a look at the news, let's talk about China. On Tuesday night, China came out with some bad economic numbers, and it really put some pressure on the markets because these numbers were a lot worse than expected. We also had a major Chinese real estate company miss some bond payments, which is showing that there is some stress in China as far as real estate goes. It's a huge part of their economy, and it's shaking. And the central bank actually cut rates a little bit, and the market still didn't care whatsoever. So these China fears are out there. Another fear, I talked about this last weekend. I said, look, if we get above 4.25 on the 10-year bond, this market's going to have more trouble. And sure enough, here we are at 4.3%. So bonds are now breaking out to a yearly high, putting pressure on markets. Now that's all the bad news. On the good news, we had a very good Philly Fed this morning, strongest number we've had in well over a year. These are a regional manufacturing number. These typically turn before the market turns. And then we heard from the Atlanta Fed. In case you don't know, they've broken up the U.S. in regions. And each one of these regions has what's called a Fed governor. And the Fed governor's job with their staff is to make projections for what their growth rates are going to be and inflation rates for their region. Then they take all the reports from the region and they put it together into a national number. The Atlanta GDP just said that their projections are a 5.8% rise in third quarter view. So all of a sudden, we've got these good and bad things all going on at once. And the market is simply not reacting to the good news, and it's reacting to the bad news. You can see the market internals are mostly bad. 70% of stocks going down today. But let's go into the charts because you're going to see we had a lot of technical damage done. Now, we talked over the weekend, and we said we fully expect there to be a pierce of this support line. And we got that yesterday, and we closed at our lows. Now remember, we said a pierce is when it goes down and then shoots right back up. And we said if we don't get that kind of price action, then that means that this support is broken and we are no longer in an uptrend. We cannot say there's an uptrend at all. Today's candle was ugly. I can't stress that enough. For anyone hoping for a bounce, this is super ugly. Now, I don't want to get a little too far over my skis at this point. Let's think about what happened this week. So we've had 3 big down days. We are going into a Friday, and this Friday is monthly options expiration. And every so often, these options expiration cycles can cause some short-term abnormalities in the market. I'm very, very concerned with tomorrow's close. If Friday doesn't roar back and it shows some sort of buying, I'm going to have to say that was it. That was it for the bullish run, and we are neutral to bearish from this point on. if this market can give us a big fat green candle tomorrow, I'm still in the camp that that was a pierce and we're likely to recover. That being said, I don't think we're going to see new all-time highs anytime soon this year. We might get it back maybe in November, December, but I think this market has really had some damage that it needs to work through. Now, the S&P still looks okay. The NASDAQ looks atrocious, absolutely atrocious. It broke a couple days ago, and it went down, and we had this little gasp of hope, and then it completely unwound. We needed to bounce here. We didn't. The NASDAQ is clearly broken, so I think you can already say the NASDAQ, even if we get a big green candle tomorrow, it's not going to bring it up to any sort of technical significance. So for me, the NASDAQ has clearly broken its uptrend, and again, is likely going sideways to lower from here. Let me show you the heat map real quick. You can see energy is the only bright spot here, a little bit in healthcare, but other than that, it was all red today. It was ugly. So we had a -2 on the week. We were at a -1. I'm going to drop this to a -1.5. And tomorrow I'm going to go to a -2 if we don't have a significant bounce. This market has gone from +3 to +2 to +1 to 0. We're now in the negative category here. So when we have a negative score, we simply now need to be making more short trades than long trades. That's the rule. We need to be short on our deltas, overall in our portfolios. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. So let's get into some potential trades here. I've got one bull, two bears. The bull, as you can believe it, it's in the energy sector. The only sector we like bullish at the moment. This is PR, Permian Resources. I've never traded this before. So, here we are at 1250. I'm really just looking from 12 to 13. I'm looking to play this either in a diagonal call spread, so buying something like the 11 of September and selling the 1250 if they have it. If they don't have the 11, maybe I'll have to buy the 10 call of September, and I'll sell the 1250, get a little bit of premium in, take a look at it tomorrow afternoon. Or you can go all the way up to 13. 13 is going to be the target on this one. So look, still bullish, but not as bullish as we've been. You really, when the markets go against you, you got to rein in those targets. You got to pull down that bullishness and ask for your bulls to do a lot less than you would when you were in a +3 market. Let's take a look at some shorts. I think these are the better trades. Now, the last thing you want to do is to short the winners. I've seen people out there saying, oh, I want to short NVIDIA. You know what? Yes, NVIDIA looks terrible at the moment. But if the market bounces, I'm going to tell you what, NVIDIA is going to be the first thing to bounce. Microsoft's going to be the first thing to bounce. Google was actually positive today. We want to find this stuff that was already weak and is starting to weaken even further. And here's one, ZI, Zoom Info Technologies. I like the 17 target here. So I'm going to do a 17, 18 bear call spread. Very simple trade here on this one. Another bear, Dollar General. So we've got this earnings miss. We've gone sideways for a long time, but you can see we're now starting to break down in this sideways trend. Next stop on this one is down to 155. So we can make a nice trade here, a 155, 160 bear call spread. You could maybe do some other strikes if they're in there. If they've got dollar strikes, maybe a 157, 161, something like that. But I think 155 is about the most aggressive you can get at this point with this support down here at the 154, 155 area. Let's wrap this up and talk about tomorrow. Lots of technical damage is done. Unless this S&P gives me a monster green candle tomorrow, we have to change our bias. We've been net bullish for 3-4 months now. And this is the first time the technicals are telling us, hey, you don't need to be net bullish anymore. You can't be net bullish. You need to be sideways to bearish in your portfolio. There's no economic news, no real earnings news. So really, tomorrow, we'll see what happens on monthly options expiration. If you have monthly positions, please make sure they're taken care of. And then we'll wrap up August. We'll make payouts. And then we're going to look forward to September. September is the month where the most crashes have occurred. The last 2 years, we've had 10% crashes in September. It's starting to look like September might do it a third year in a row. We'll wait and see, but we'll definitely be tracking it. That is the Market Roundup. Thanks for joining me.